imagine DCA and NCB from COVID till now. That would be like from $200 to like $40.
You actually have to dollar cost average the right thing.
Yeah, that's true.
Because like you could be dollar cost averaging, being consistent doing that, and then you're buying something that is just not really doing well.
Yeah, that report is supposed to look really, really nice. Simple, bro. This would fly to the moon.
So then that's the thing. Like, how much gain is that? So how?
Hi, Limit Breakers. My name is Dr. Thaon Simms, and welcome back to another episode of the Limitless podcast. Joining us, as always, is your co-host, Dr. Matthew Preston. Hail up the people, and Matthew.
Hey guys, what's good?
Nice. And so, I mean, it's been a while that Preston and we low-key haven't recorded in, it's been weeks, you know. I've been under the weather, traveling, life has just been happening, but for this episode, I like the premise of this episode. I think it's a chiller, laid back, more long-term type episode, in my opinion. It's something that we don't normally do, and we mention every now and again. But I think it's something that other people as well, like an investing strategy that other people do, and it's something we're going to talk about called dollar cost averaging, right? DCA. So if you hear us say DCA for short, that's what it is: dollar cost averaging.
And what is it?
And you know, so it's an approach. It's like an investing strategy or an approach. And people say, when people say you can't time the market, but it instead of trying to time when a stock will rise or fall or whatever, right? You invest a fixed amount of cash on some regular schedule. So whether that's weekly, monthly, whatever you want to do, you put in a certain amount of money on a stock on a regular basis into that. So just the same investment or investments. It can be multiple. And so, when prices are high, you still are buying. Prices are low, still buying. And over time, that's supposed to smooth out like your average purchase price. But generally, they say stocks go up. So yeah. Not always the case, but we have a lot to say about this episode. And there is something I've realized too. Like, most people say they want to invest. Do people come up to you and ask you about investments all the time?
Yeah, it's a good amount of time.
They do that at work too?
Yeah. Do you too?
Yes. We do have convos about this investing all the time. And
how do you handle them?
It depends. It depends on the questions, because some people always will want to know, what should I buy? We can't do that because we're not licensed financial advisors, and nothing on this show should be taken as financial advice.
It's not even just that you're not a licensed financial advisor. It's like, I feel like to truly give someone a proper recommendation, it's like you kind of have to, well, you don't have to, but I think you should understand their situation more. So it's like, how much money are they making? What are their expenses like? What are their, things like that. And it's like, you can't just, it's not just like to this person who has a kid, or they have they're about to retire, or they're earning this amount of money. There's a lot of those kind of things that I think should factor into the recommendation. You also even have to understand the person's personality.
Yeah.
Like, what's their temperament? Like, how can they, can they handle certain stuff? Do you have to even even something basic? Well, I wouldn't say basic, but something I think that's very fundamental to this is that you need to first go into this understanding that there's risk. I've had conversations with people, and it's almost like I was trying to explain to the person that, hey, even if you're the best in the world, I guess Buffett and lots of those other great people get the best returns over the longest time period, there are a lot of times they still get things wrong, you know. And it was almost like I was trying to explain to the person that, yo, even if you're the best in the world, you're still going to get things wrong. So like you have to first understand that, yo, not everything is going to just work out every time. There'll be times where there are things that you could have done to avoid it, but there'll be times where, you know, like suppose you just buy this business and bam, an earthquake just happened and mash it up, or, you know, things like that, where it's like these events. And it's almost like I was trying to explain to the person that, hey, there will be risks. Like, yes, you'll find opportunities where I think the possible upside justifies the risk. So it's almost like you have say your downside is maybe 10, 20%, but your upside is 100, 200, 300%. It's like you should take odds like that almost every time in life.
Yeah, I agree.
But it's like, yeah, I was trying to kind of explain that. And yeah, they just weren't
who
agreeing
talks
with
about
me.
stuff like that. I find that, so I listen to Alex Hormozy, and I think he's the one that pushes that a lot, like the downside versus the upside, and why a lot of people, you know, don't invest in the first place. Like, you know, a lot of people say they want to invest, but I find that even some people just really and truly they want, or they're waiting on the perfect entry. Like they want the lowest possible price, you know, the exact bottom, and, you know, the guarantee that whatever stock they pick, they won't look dumb next week or the following week. Yeah. But
there is no guarantee.
Exactly.
No
and you'll
guarantee.
never know it's the
no guarantee.
You'll never know it's the bottom. Like you'll never know if you're actually buying. Yeah. Like you'll never know until after. It's always after. Like you look back and you're like, oh wow, that was it. Or if it's the top. And I think that mindset is why a lot of people don't even start investing in the first place. And so that's why I think dollar cost averaging, or DCA, it's it's relevant, especially to our channel and the kind of things we want to talk about financially with a lot of people. And I think it's one of the cleanest ways to just build wealth without doing, you know, the bagger, without doing trying to predict the market and time the market and so on. And you let time do a lot of the heavy lifting. Yeah, time is one of the greatest, or a very powerful tool. So, you know, to make this practical, we are gonna give some examples of things we look at and so on. Our own maybe top 3 stocks on the Jamaica Stock Exchange that we would probably DCA, and for different reasons, of course, right? My reason for dollar cost averaging a stock could be completely different from Preston's reason. And, you know, we're going to talk about why, and some things we look at in the business, why we would want to dollar cost average these companies. Yeah. And
one of the other things I was just thinking about, if you like how I kind of view DCAing or dollar cost averaging, is it's like the equivalent to just being consistent in life at almost any other skill. So instead of if you're a student, wait until the night before the exam and trying to or the day before the exam studying 8 hours or whatever, you just spend 10 minutes, 15 minutes, 20 minutes, half an hour a day, every day, or once a week or 2 times a week or something like that. A lot of times I think you'll get better results. Or if you're like an athlete and you're training, you don't wait till the day before the competition to just rush every training. You just be consistent, you know, losing weight, any habit. Yes, it's the same thing, you know.
Yeah.
Consistency.
Consistency.
So the important is that you have to, with related to the investing, well, just you have to do the right thing. So is there like some saying about, like, say, I don't remember who it was, but like, say it's like a basketball or something, like maybe Michael Jordan, he was talking about, if you're like, say you're practicing a shot, if you're practicing poor form, it's like you're going to get really good at doing the poor form, which you don't want. You need to make sure that what you're practicing is actually the right thing. And then tie that to like what we're saying with like dollar cost averaging. You actually have to dollar cost average the right thing.
Yeah, that's true.
Because like you could be dollar cost averaging, being consistent doing that, and then you're buying something that is just not really doing well, and you're just like, no, I'm dollar cost averaging, I'm just going to keep doing it 10 years, 20 years, 30 years. It's just not doing well. You know, it's like, if you think about just it's really important you pick the right thing too. So
Yeah, exactly. Which
yeah.
is why we also talk about timelines too, because I think for the purposes of this episode, we're gonna give a timeline of maybe 3 years. Like if we were to dollar cost average a stock for the next 3 years, I think that's a decent enough timeline. Because you're right, picking the right stock is key. Because one, you have to at least like the stock you're holding. Like if you don't like the stock you're holding for the next 3 years, I find it hard. If it was me, I would find it hard to find the money every month to put in this thing that I may not really like. So I always invest in companies that we like and understand and so on. And I don't know, I feel like for super long timelines, like let's say you said, 10, 20 years, right? Let's say you wanted to dollar cost average a stock for the next 10 years. It's very hard to see 10 years down the line versus 3 years down the line, because 3 years down the line from now is 2029. 10 years is 2036. So it's harder to predict what may happen for a company way out there than in the next 3 years. Granted, still not perfect, but it's easier with the shorter timelines. So I think having that timeline is a good reference point. And yeah, I think we should probably jump right into it. People are probably waiting. They're like, Preston, tell us what stock to buy. You want to go first or you want me go first?
You can probably go first. I feel like you have one in mind already.
Bro, I'm literally scrolling to find one. This is off the dome, by the way, guys. So, off the top of our heads. There are some stocks that
Mhm.
actually, there are some stocks that I have in my mind, though, of course. I'm thinking of even the People's Choice right now. I think that's the easiest stock I would DCA. You know which stock is the People's Choice Award stock? Which stock
Trans
everybody
Jamaica,
loves? Trans
TJH.
Jamaica. I thought it's an NCB. Imagine DCA and NCB from COVID till now. That would be like from $200 to like $40. Yeah.
No,
But the the stock I'm thinking of, one of them is TRANSJAM. There's so many
yeah,
reasons
makes
why
sense.
I would DCA TRANSJAM. One, for me, if I'm dollar cost averaging a stock, it has to be a simple business model. It has to be simple. It has to not have too many different like external risk factors that can affect it. And I think with TRANSJAM, it's such a simple business. You drive on the toll, you collect toll money, and of course they get money otherwise, but like it's mainly toll revenue from that. So it's simple. I like it. And they're very consistent in terms of like their revenues. And I think for even things like dividends, I think if you're a dollar cost averaging a stock and you're somebody that cares about dividends, you'd want to see regular dividend payments. And TRANSJAM, I think, pays dividends twice a year, and they have decent yield on the dividends. Like I think last year, well, at these prices now, TRANSJAM is $7 right now. So the yield would have fallen since yield is tied to stock price. So the higher the stock price, if you're paying the same amount, the yield goes down. And it's what 3.65% at $7. But they pay good dividends and they pay predictable dividends every year. And I think people that want dollar cost average, if it was me and I had millions to invest, I'd also be looking at dividends from TRANSJAM and how consistent they pay. And it's cash, like it's a cash business. They're collecting cash, so it's easy to pay those dividends and so on. So I like TRANSJAM for that reason. Another reason is that their revenues are somewhat tied to inflation. So I mean, toll raise basically every year, right? And you have an allotment of how much toll can raise per year, but it generally at least the bare minimum keeps up with inflation. So if you're trying to hedge your bets against inflation, right? Like if you want your money to grow and beat inflation, I think if the company is earning in a way where their revenue, like the increase in revenue, is also kind of tied to inflation, I think that works well from an approach like dollar cost averaging. So that's kind of why I do like TRANSJAM for that, because that the once the toll price raises every year, revenues raise, dividends raise. Usually, I mean, in a perfect world, that's literally how things would go, and that's how things have gone in the past. So, yeah, I think it works like that. I don't necessarily see anything major happening with like toll and so on. Like for me, you have to kind of think about what are the risks now of investing in a company like this for the next 3 years. And we spoke about a couple of them before. One of them is like, let's say the government decides to build out the railway system, right? And, that can significantly hinder the amount of traffic that flows through the tolls and therefore significantly inhibit revenues. And so, in the concession agreement, there's actually a section that prevents the government from basically doing that. Like any loss in revenue from things like the Jamaica Railway Company, I think or if we build out our railways, then they have to be compensated by the government. So they already have agreements, like contracts in place with the government to secure their revenues. That's very important for a company when you're looking like long term, like medium to, don't know, just medium to long term. Very, very important. So yeah, those are some things I like about TRANSJAM. And look at the growth. Like, look at this growth in the past couple of years. This is insane growth too. So not only are you getting dividends on top of it, but you may also get capital gains as well. Right, the price generally increases. Have you looked at their recent report by chance, Preston?
I think I glimpsed it. I think profits are slightly down or something.
Mm-hmm. For the quarter. But did you know that revenues
Profits
were
down
like
7%, revenues up 2%. So
mm-hmm. And that's with them being closed for I think 15 days out of the month. Like not charging,
well,
sorry,
not
not
closed.
closed.
Oh,
Yeah,
yeah.
not closed, not charging. Sorry. So that kind of looks good, to be honest. And I can't even imagine, because Mandeville started when they started collecting, I think in December. Yeah, in December. So
you're probably better to say than me.
yeah, I remember being charged in December. We never got charged in November for Mandeville. So I think it started, I think it was mid-December or early December. I don't remember. Sometime in December, I remember being charged though for the Mandeville. And so you're not going to see a true reflection of revenues until this quarter's results come out. And this quarter's results would be due mid-May, the latest. So that report is supposed to look really nice, in my opinion. Yeah, that report is supposed to look really, really nice. So I guess we shall see.
This notice that came out end of this is October 31st, 2025, 8:33 a.m. The effect, so Trans-Jamaica Highway wishes to advise that our wholly owned subsidiary, TRANSJAM Highway Operators Limited, THO, executed the concession agreements with NROC, which is a national road operating and construction company, on October the 23rd, 2025, to operate Phase 1C, which is Maypen to Williamsfield. The effective date of the agreement is December 1st, 2025, and expires on June 1st, 2038. Yeah, so December 1st, 2025 was when it started.
Hey, yeah, bro. Um,
So you're saying you
yeah.
expect
So
their quarter one, which is January to March, to be really nice.
yeah, gonna be probably
Okay.
record breaking stuff, like record breaking profits, record breaking revenues. Um, yeah, that report's supposed to look really
They
nice.
told you, didn't they say how much they told us how much money they make from it, right? Or how much they would estimate?
Well, I don't know. I know how much they charge me. I know it's not as much as like Portmore's, toll. Um, because I think when you look at the toll booth at Mandeville, it's not as many cars as if it were like Vineyards or like um Maypen toll booth. I think it's more Vineyards that's buzzier, and then not even as close as Portmore. Like if you actually sit by the toll booth and see how many um booths are actually operational, and then the lines and all of that stuff, you don't see that as much outside of Mandeville as you do with the others. But I think based on how much they charge for the toll, it should make up, and it's close to the same as Vineyards, which is like 470 for class one vehicles. Um, so yeah, I still think they should earn a decent food, to be honest.
I see. So they had an investor briefing February the 20th, 2026. It's on YouTube. You can just type in Jamaica Highway Limited's Q4 investor briefing. I see a quote saying 10 million US additional revenue per year from the Williams fields. So to put that into context, TRANSJAM does, well, they did just about 100 million, 96 mil US in revenue. So that's about a 10% increase, a little over 10% increase in revenues. And then, yeah, the cost shouldn't really go up that much. So
yeah, they really shouldn't. So greater margins.
So yeah, you're saying your first pick is TRANSJAM.
It's not my pick, the people's choice. The people picked it, bro. Backed by popular demand. But yeah, I think it's a straightforward company, and I think it would be a straightforward company for me to invest in if I were to dollar cost average something for the next 3 years. So that would definitely be on my radar for sure. Yeah. Yeah. I think it's a decent company. What do you think?
Yeah, I mean, I think a lot of stuff you're saying. It's not a bad pick.
Okay.
It's not a bad pick.
What would you pick?
Yeah, I'm actually going down the list. Let's see.
You know why I think this is a bit more difficult? I think it's because we don't really invest like this. So it's kind of, you have to now think forward for the next 3 years. What's the landscape gonna look like? Which doesn't make it easier at all.
Yeah. Well, I think in some ways I'd want some. Can you say next 2 years? Because of like what happened to Jamaica recently with Hurricane Melissa, I'm thinking, hey, something construction related. So I'm kind of going down the list, and I'm like, should I do like Carib Cement? Should I do Lumber Depot? Should I do Atlantic? Some of those construction companies. I was thinking, one the other thing to even factor in, I guess, is even how much money you'd be moving.
True.
But I guess this is like a scenario where it's someone who's, I guess, working and such.
Yeah.
Because in some ways I want to say Carib Cement, but then I'm like, I feel like I'd probably pick next 2 years, I'll probably pick Atlantic as one of them.
Atlantic.
Yeah.
Okay.
Atlantic Hardware and Plumbing Company. I think for them,
you feel safer with Atlantic than Carb Cement, because
not
Carb
about
Cement has
safe.
a stronger track record. Like they've been putting out stuff for much longer. Atlantic have they even been listed for a year yet? I don't think it's been a year yet.
Well, I mean, I don't know. For me, Atlantic listed. I think they're listed April 2025. So this is just about a year after listing. They listed on the junior market. And then because they listed on the junior market, they get a break from paying corporate income tax, which is what normally 25%. So they've already got a year of that. So they're going to get 4 more years of paying no tax. Then they're going to get 5 years of paying half tax. And then they sell a lot of the construction related products. They sell carb cement and other stuff. Yeah, and they basically, I think a lot of the same things that will benefit the carb cement and other stuff will benefit them. And then also there's like there's a lower nominal value, you'd say. So I feel like some like, even though I know it's not, we know $100 stock can actually technically be cheaper on like an earnings basis. Yeah, compared to like a $1 stock. But I think that's a factor in some people's, their view, like how they view a company. It's almost like some people look at it and be like, oh, carb cement's $100, that's too expensive. But I think they look at Atlantic, they're like, oh, it's $2. Also, Atlantic, the shares are not very easy to get. And yeah, I think the tax break is a big thing. And then they sell a lot of the construction. And then especially we're seeing dollar cost averaging for 3 years. I think, I don't know. I think that would be definitely one of the ones I'd consider.
Okay.
Definitely one of the ones I'd consider.
I think I agree with you, even with the tax break thing, because we're seeing a lot more profits from Atlantic now. I don't know if you saw.
Is it?
No, not now. Like this, I'm talking about this year, this entire year. In terms of like profitability, like less finance costs and so on, and how that hit the books. I'm curious to see how they perform over this next year with the so-called construction boom coming from like Hurricane Melissa. I mean, they haven't paid a dividend yet too, so that's also a bit iffy. Like, when are they gonna pay a dividend? You don't care about dividends in a DCA stock. You don't care about dividends.
Not that I don't care. I mean, if they paid it, they paid it. But I just look at gain, total gain.
Just look at gain.
Dividends plus capital gains. So
I think they have more to offer in total.
We will see, man. We will see. We will see. I mean, at the end of the day, this is the same dollar cost averaging thing we're saying is like, this is something you'd be following up. So checking their reports, their shareholder meetings, investor briefings, financials, articles. I'm also interested because they had put out the notice like about what part of one of the Musson companies like sold their arm to Atlantic. Yeah. And then that part is like agriculture. It's the agricultural division, yeah. So I'm thinking, I'm wondering if that's going to be the end of it. Because like you can basically just shift. You can make the business that has a tax break buy other arms of other businesses, and then those now get a tax break. No?
Yeah. It's brilliant. It's low-key brilliant. Yeah, you could. And I want to know, like I don't really know the size of T-Getters, like especially the agricultural part. And apparently it's supposed to be branded Agro Atlantic. interesting.
Where you saw that?
But in an article, I think it's an Observer article. See if I can find it and send you.
I remember seeing that. But yeah,
I found
I
it. Yeah, see it there. I'll put it in the chat so you can probably bring it up. There it is. And so, yeah, like I love how he even talks. Like I'm looking at this article. We lost 1 week of sales in October, but the reconstruction efforts that were required were able to satisfy customers, pivoting into products that we actually trade. And then, I mean, he was on our podcast, so he spoke about a lot about the company. If you guys want to check that episode out, we will probably leave a link in the description. But yeah, I like the different things that they're doing and how big the company can get because of how close they are tied to Musson, as you said. So other Musson companies, we can be on the lookout for like structural changes, things like overlap, in terms of synergies between different companies. I don't know, man. Like, I get why you choose Atlantic. It looks to me pretty bullish. Oh wow, they quoted us in this one. Yeah, this is the one where they quoted the Limitless podcast, that same article. Scroll down some more. Yeah, it's that same paragraph at the end of the paragraph. No, it's the speaking recently part. Yeah. But yeah, I guess you're reading everything.
Yeah, speaking recently on Limitless podcast. Nice.
We're big now, bro. We make it. I wonder who wrote this. Who wrote this article?
Cody and
Barrett.
Senior
Big
business
up, Cody.
reporter, Observer. But yeah,
big up.
I think that'll be one of my picks.
Okay. Strong pick. Strong pick. I like it. I like it. Do you like it?
That's trying to get on the line to see what else though.
Okay. I guess it's my turn. I spy with my eye something shiny.
Did you touch broilers?
Would I touch broilers? Yeah, would you know? I definitely would touch broilers. I wasn't even thinking about
3 years people would view it better?
I think 3 years people would forget what happened. Yes. Like a lot of the negativity. I mean, yes, people always bring up back stuff, but for the general public is very short-sighted. I think, whatever happened with broilers in the US operations, their reports actually just show how strong the Jamaican operations are. And I think once, all the US fiasco stuff are like, once they calm down, once they're sorted, once everything is worked through, I think that, they will. Oh, wow. They don't even have a PE. I just realized. I think they'll go back to their former glory. And I think the people that also are shareholders, and I would say the big shareholders, definitely care about the stock price, and right now it's trading at what, $16.80 coming from 30s. So yeah, coming from 30s.
I was looking at the stock charts. I was like, wow.
I'm literally just looking at the chart now. Winters has like $40 too. And that was January 1, 2025. Look at that. Yeah.
So that's actually your pick?
No, but I mean, you asked me about broilers, and I think for the next 3 years, yeah, if it's DCA in a stock, because I'm not gonna say it can't get worse, because it can definitely get worse, but I don't see it getting worse from now. I think we're at that point where it's at a decent, like a low. But as we say, you never know if it's the bottom until after. So you don't know if you're at the trough until until after. And the stock starts to rise, and you're like, oh my god, if me did know, me should have buy this, blah blah blah. So yeah.
So what's your pick then?
What is my pick? I was actually looking at a company that some of you guys might know. And it's they sell like a lot of different products, like a lot of products, like a ton of products. I don't have any of their products with me, but it's a company called Wisynco. I like Wisynco. I've always liked Wisynco, and I've been a shareholder before. And we also had Andrew.
William.
Sorry, no, we had William on the podcast. We wanted to also get Andrew on the podcast. We had William on the podcast. William Mahfood, chairman. And I don't know, it's also a simple business. Why I like it, and I don't know if you saw the recent report, but their profits were up by like 50%. I think it was 50%. Nice. Let me take a look and see again. I know their profits were like
I figured they would have. I remember when they started talking about the whole brewery and a lot of the expansion. Well, from before the brewery even became like, made the papers, they've been talking a long time about the expansion.
Yeah.
And I was looking at it. It's just that I guess when I had kind of quantified it at the time, I was like, trying to remember when they first started talking about the expansion. Maybe it was like sometime in 2025 or late 2024. It was like maybe $21, $22. And if you look at it now, it's $22 or $22.74 today. So it's like, not to say that, there were times where you could have got it lower still. Like there were times I think it dropped to like 18, 19. So then it did better. But I guess it didn't look like a big gainer to me. So I got lucky with that one.
Yeah, they had a major expansion, like I think they operate out of Lake Spen, and the size increase, when I remember reading it, it was like it wasn't close to double, but it was like a decent size increase in terms of like the square footage. If I remember clearly, it's like they're up
but
to
you really
now.
see the share price flying that much in 3 years?
In 3 years' time? Well, what caused the share? The question I had to ask myself was, why did they make so much money in this quarter that passed? And it goes for me like
let's quantify it. So let's see for the quarter you're saying, which is the October to December 2025. Revenues or sales were up 14%. Profit was up 49%. So they did just under 1.5 billion in profits. Yeah. Did you compare that though? Was it that last year it wasn't very good?
Last year in terms of what, revenues?
No, like because you said the quarter was good. You're saying it's good in relation to the last year.
Compared to last year, saying, same period last year.
So I'm saying, did you look at, was last year a soft quarter?
Well, you can check now.
So just pulling it up. So December, for the quarter you're talking about, which is their quarter 2, October to December, for 2023, they did 1.2 billion in profits and 13.2 billion in sales. Then for 2024, it was actually down. Well, revenues were up 14.2 bill, but then profits were 990. So it's not to say that this quarter 4 that just happened wasn't good. Okay, it's still better than even the year before that. And I could even probably check further back and say, okay, what was 2022 and those stuff too. Yeah. No, it still is a good quarter.
Yeah, I think objectively it is a good quarter. And then you start to think, why was it so good? Because when we had William on the podcast, he spoke about water and water story and how water got to where it is. And it was off the back of Hurricane Ivan. and Catherine's Peak not being able to meet local demand, and so they needed to get bottled water out to people, and that's how water got to where it is. And I look at now another hurricane has hit us, Melissa. I mean, everybody needs water. People are before the hurricane, people buy up water. After the hurricane, people are buying up water for relief efforts and so on. But it's not just water that they sell. You know, they have a bunch of other products that people would have bought and distributed as well. You know, whether it's their food, whether it's the beverages section, etc. But they when you compare it, right? When you look back at Wisynco, one of the major problems I had with them was their capacity to meet local demand. And they were at capacity. Like that for a great portion from my understanding of Wisynco, like local demand, they were basically at capacity. Things were running like 24/7. I think there was an article that kind of spoke about a lot of those things too, that I feel like David wrote. I remember reading it a couple weeks ago. But yeah, and now they invested in themselves. There's more capacity, more in terms of production, so they can produce a lot more, higher output. And then they also at the same time launched, you know, their beer line and doing that push, which I think has, you know, greater margins, which allows it to be way more profitable. So you're looking at a report where yes, revenues increase, but profits increase exponentially when you compare that to the revenue increase. So, and you have to think about even who are Wisynco's customers, because a lot of the customers themselves are also in the tourism industry. You know, they're like hotels and so on, and they were closed. So how did that really affect all of that stuff? So, you know, a lot of like digging and so on. And I don't know if you know, they also acquired this was 20 this was last year. This was like earlier last year, where they acquired, I think, Ringtail Bottlers Limited. Ringtail does like different alcoholic beverages and so on. I think it's the parent company Select Brands. Big up Duval for that. And they do like Stone's ginger wine and so on. So they're growing their product line. They're constantly, you know, looking how can we increase revenues by either acquisition or, you know, increase in capacity and those kind of stuff. And I think for a stock that you're looking to dollar cost average, you want your company to be doing those kind of things. Like you want to see growth. You don't want them to stagnate, to rest on their laurels or anything like that. You want them to constantly be going out for more and more food. Like they're hungry to grow. And then they also pay like
more food.
More food. Yeah, man. I have to get more food, bro. You're hungry, you know, you have a hunger, bro. Like companies that I
you
own.
Didn't get, I was making a lame joke.
Oh, wow. Wow. Let's hope the Mando pages. That was very lame indeed. Yeah, facts.
I try.
Yeah. I've lost my train of thought, bro. But and they also pay dividends, I believe. I think they pay regular. Is it twice a year too as well? I know they pay. I don't remember, but I know they pay dividends at least once a year because they just paid one a while ago. So yeah, I mean, I think Wisynco has a lot going for it. And buying it kind of just makes sense for, you know, the long term or the 3 years. Because I don't think they're increasing in exports too, you know.
So, like, so what do you think the share price will be in 3 years?
Their current level. This is what, 2029. What's it now? $22. I could see it at $30 in 3 years.
So how much gain is that?
Let's see.
It's like
22
30.
to that's what 8 upon 22. That's close to 30%.
Mm-hmm.
Yeah, 30% on top of the dividends you get into.
Mighty
yeah.
conservative. You're aiming for conservative picks.
Kind of, because I feel like, I don't know, I think somebody doing dollar cost average is conservative. Not always. I think majority of the people though that dollar cost average might just be conservative though. Like if that's your main practice to buy stocks.
I was even thinking of throwing in some wild cards, cause like, yo, what about like say
Quintile?
3 years?
Oh, sorry.
Well, that wasn't what I was thinking of. I was thinking about WIPT.
WIPT.
Like, what if, like, for example, what is going on with oil? Us in Jamaica possibly having oil and the developments with United Oil Gas Company.
True.
I suspect that within 3 years we will have, some amount of data on that. So I'm not sure if there is, significant amount of oil, but there's a chance there is. And then I'm like, yo, what do you think the market reaction to any of these gas companies or oil companies would be if we find out that we have oil? And then I'm like, yo, with WIPT, it's not easy to get shares. So I'm like, if any positive news comes out about it, and it looks like there's a high chance we have oil or petroleum products or whatever, petroleum, I think the share price would fly. So I was like, wow, even something like that, like you, and then it could work out because it's not, well, it's how, can you get shares? Let me sort of queue. Yeah, I don't know.
It's really not
I guess the worry is that I think they spoke about them wanting to issue shares. Well, depending on how you view that, though. Yeah, interesting.
Yeah, I think WIPT would be very interesting.
Yeah, I could see a play there. I think about it. If they issue the shares, say they do their whatever. I don't know what price they issue the shares at. If that causes, say, stagnation for a while because there isn't a lot of maybe good things or big stuff happening with the company, you can then, I guess, you could then kind of take advantage of that, and then say, okay, I'm gonna just buy dollar cost average. Say, I don't know what price they issue the shares at, but say it's $10 now. I don't think they issue it at $10 still, but say it's $2, $1, $5, whatever. If they issue the shares at that price, and it kind of just stays there for a while, and you just slowly buy up, and then if there's a chance of oil or whatnot,
would we
a high chance?
Yeah, that's the question. Because like, suppose we don't even confirm the oil yet, but it looks bullish. No, but it looks bullish.
As I said, yeah. Oh, you're saying like it's just
like when would it move?
Expectation of it.
The expectation.
Yeah, that's the thing. The expectation of you could de-risk it and sell piece on. Oh, it looks like it could be, or like, oh, there's a chance goes up. The chance goes up, and then yeah. That's why I'm like, why did you choose like you just going for 30%, bro?
Yeah, true.
When there's something like that,
I guess, but
like, how far do you think of it? How much do you think it would? If for example, they don't even issue shares, and
all right, here's
6 months later,
my problem with something like that is, can you imagine the individual or the investor that is buying a stock for 3 years and for it to not have any gains? Like, suppose you're buying with the expectation of oil, and you're putting in money every month. You're looking at the stock movement. Has it moved?
So the downside is what? So 3 years, what's the downside?
The downside, 3 years, you'd have been putting money in and you probably make a loss over the 3 years.
So what's the downside? Quantify it.
The downside, all right. You can quantify it in terms of worst case scenario. Yeah, because you have definite different scenarios, because you are even talking about, all right, suppose they issue shares. Suppose they do issue shares.
That's what I'm saying. Actually, tell me, what is your worst case down percent?
Yeah, my worst case down percent that this drops from
Worst
$10
case.
to back to IPO price or to $1,
Okay.
maybe
So
$2,
okay.
depending on the supply. Because the reason I
But
think
you're
it's
trying
trading
to
this high is supply is
uh-huh.
very tight. So,
But then what if, for example, you wait till you get that certainty? They say, okay, it's at $1. And you say, okay, I won't buy into the offer, but maybe I'll just buy on the market after. But then, so
but
if
wouldn't I have been
you're,
buying from long before?
well, it depends on how you'd want to do it, like how often. I guess you could split it up. Like say you're put, I don't know, 10,000
Yeah, but meds,
Jamaican or a
I'm
month.
buying now. I'm buying now.
Uh-huh.
If in 6 months, let's say, yo, we're
Mm-hmm.
gonna issue new shares.
Mm-hmm.
I'm already 6 months deep into this. They're
Mm-hmm.
issuing new shares. Usually, when you issue new shares, it's at a discount to the current price. So already I've made a loss because the stock price would usually follow that, right?
Mm-hmm.
Now I have to think, all right, is this thing even worth staying in?
So you're saying that's the 6 months, but then what about if we're saying the same 3 years? What about the 2 years and a half where it is at the say $1 price or whatever you're saying that you
I
would
mean,
be still buying?
we don't know if it will be 6 months or a year or two that they'll issue shares. But I take your point. Let's say it is
I'm just
we have
saying.
another 2.5 years to go,
Uh-huh.
right? At that point, I mean, you now have to reevaluate and say, all right, can this actually do the thing I wanted it to do? And even if we find oil and so on, does that really trickle down to WIPT? I guess it kind of does. It kind of has to.
Mm-hmm. Well, it
There are not
doesn't.
many
Hold on, but
players.
once again, your play doesn't have to be it's actually trickling down. Your play just has to be
True.
people thinking it will.
Agreed.
As I said, if an article comes
But
out
does it
about that,
matter
or
if people think it will when you have, millions of shares out there now, right? Because will the demand be great enough at that point to counteract the
well, you'd have to
oversupply?
decide that, bro. If
Yeah,
you
it's a
look
lot,
at the
but
prospects,
that's the
and it would.
problem with DCAing because like now
But okay, other thing we need to do. What do you think is the upside? So worst case scenario,
Mhm.
you said that, but what do you actually think would happen if the news was positive?
Simple, bro. This would fly to the moon.
So
I
then that's the
think
thing. Like, how much gain is that? So, think of it, quantify, like, actually put a gain,
it would double
percentage gain.
at least. I think it would double. I think it would go to $20 just based on that hype alone.
So then so the downside was how much percent?
The downside is I don't know.
Because my issue, even you calculating the downside. Say you start now, 6 months, you're buying at $10, whatever price it's at. Then say the issue shares at, I don't know what price, say $5, $2, $3. If you continue to buy at that same $2, $3 for the next 2.5 years, what's your average price? It's almost like you've kind of wiped out that high if you literally just kept buying. So it's like, what would your average price
fair.
be at the end of the actual 3 years?
Yeah,
So
but
then
I'd
what would it
want
be
again.
if that? Yeah, that's what I'm saying. That what would it be when what we're saying, whatever possibly happens? I don't know.
True.
What I'd say look at the upside and then compare the downside. So yes, there is a downside. I'm not saying like, I'm not doing this. I'm uncertain about whatever shares or whatever is going to happen with it right now. But I don't know, man. I'm just a dreamer,
Maybe
I'm just a dreamer.
Said wild card.
I honestly would consider it. I would consider it, yo.
That's for me. That's wild,
I would consider it.
And I think the reason that's wild for me is I hear you logically, but because there's that long time aspect with dollar cost averaging, there's also that emotional, I've been sitting in this for X amount of time, So you'd want something with a better prospect of
You'd be happy with your
gains.
30% gain in Wisynco after 3 years?
Remember, I don't dollar cost average though. So this is not my okay, good question. Would I be happy with my 30%? In 3 years, no. If I'm being real, no. And if you really wanted me to think of something for 3 years that I'd be happy with, there are other stocks I possibly would choose. Actually, there are definitely other stocks I would choose, and I'm looking at them now, right now. Yeah, even
Yeah,
there are
just
two
start
stocks I'm
over.
looking at right now. Yeah, actually.
Okay, go.
I would choose. I feel like I've said this one on the podcast though. Oh, we were talking about indies before this. Before this episode, I would also probably choose indies. I think indies in the next 3 years they would still have that 12.5% tax break, so the half tax. So they would still have that. They would have possibly started to, at that point, distribute Regadenoson in the US, which, as we said, would be the game-changing thing for them. They consistently pay dividends as well. I think it's once a year, but their dividend is usually a nice like a dividend. What's the yield? 4.55% last year. So they'd probably pay you what 3 dividends in that time period. I think they're currently sitting at $2.97. I think $3 is like based on Mupuri, who is the CEO, his estimates as to how much money they can make from Regadenoson. I remember we
What's
were like
Regadenoson?
calculating. Regadenoson is a drug that they use in cardiac testing. So it's a heart test that they'll use it for to give patients. So it's it's helping to diagnose certain heart issues or illnesses. And it is, I would say, it's increasing in its use now. I think they're trying to use, what do they use now? Dobutamine for that stress test, and that has more side effects. So now the pushes.
No, it's more. It is more. It's the Regadenoson has been the main one.
No, I'm not. But yeah, I was saying, what was it before? It was dobutamine.
No, it was adenosine. That was
Adenosine.
a good while back. Many years back though.
Okay. And then they're now using Regadenoson, which is a bit more specific for certain receptors and less side effect profile and so on. And so it's growing in popularity. It's pretty high up there. And the US market, I remember when we did the research for Regadenoson, was massive. If indies even got 0.5% of that market, that would have been massive for them. And we started to look at the different players, and it wasn't many of them. I think even at the AGM, Mupuri said there were 6 or 7 players of that would distribute Regadenoson. So, so I think the upside is pretty large, and if Grace Kennedy continues to back them like I think they will, I see this stock going to. I mean, our conservative estimates were like at least $5, and they're trading at close to $3 now. So that's a decent gain in those years. Yeah, I hope they pull it off. I think it's a better bet than finding oil, but I could be wrong. It's so funny if we actually find oil. That would chat would clip us up. Yeah. But yeah, I like indies. I think that's the play that I'll be looking for, and even without that play, they already still are generating decent like cash and so on. I didn't really love their last set of results, but overall, still a good company. They use a lot of the products that we prescribe as doctors. Pretty household name, like standard products for like hypertension and diabetes and so on. So, and cough, cold, flu, and those kind of stuff. So yeah, don't see people not getting sick. So yeah, I liking this.
Okay. I'm looking at some others. One ones I was considering was SYGNUS.
Oh yeah.
Yeah. Yeah.
Which
11.
SYGNUS?
Good question. Well, I mean, we're talking more JMD for all of these stuff. So I do JMD.
Okay.
Yeah. Okay, I feel like it kind of follows the same. They're growing out. They're basically they're growing out their for their loan portfolio, and I think that when I'm looking at some of the moves that I think they're making in terms of them, like making more connections with their financing, I would be surprised if I feel like SYGNUS would be more about if I was like 10 years DCA though, versus specific with 3 years. But I feel like there'd be one I'd consider too. Or even MAILPAC I was looking on.
I'm surprised you didn't say SYGNUS Real Estate Finance Limited, SRF. I was looking at them too. Because remember they developed, I think they're developing or so on the Lake Spen land that they have. It's a massive piece of land, 55 acres. And that's SYGNUS. And I'm thinking, you know, if they do start to sell it piece, what are they going to do with all that cash? I mean, yes, they could invest in other real estate ventures, but they could also pay really nice dividends too. So, you know, we don't really see great real estate plays on the market. We haven't. Not to say that it can't happen. And SYGNUS is a very bullish company on stuff like that. So yeah, it's something I'm also looking at. Let's see how things go. But I think it could be a play.
Yeah, I was thinking MAILPAC too.
Okay.
I'm still wondering if they'll be able to, if they're with the fact that they're listed, and then they bought my cards, and then I remember they signed. What was it? Was it Temu? They signed to be a distributor for Temu. I don't think they're not exclusive, but I'm thinking that hey, they have like the whole warehouse. They had their existing warehouse pre my cart buy. Then I guess my cart had a warehouse or warehouses and stuff. So they, you know, they've combined that in the group now. I'm wondering like if people like Amazon, was it Shein, and those stuff, if they want someone to handle more of the business here, because I've been seeing more, you know, people are still doing their Amazon free shipping and whatever stuff. I don't know how long it will last. Maybe it continues or whatever. But I'm just thinking, if one of those players wants to really get serious about the shipping it to Jamaica and stuff, I feel like they'd probably more go for like MAILPAC. You know, they're a public company. They already have all of this set up. They probably could give a pretty good cost or low cost.
Yeah.
Because I like their size. And then also what I look at it is that the shares, like the ownership is getting kind of tighter and tighter. I think it's almost at 90% now. It's held by like the top 10. Yeah.
What happened to the shares that they distribute? Oh,
I don't think they've issued them yet.
Yeah, they were to issue shares for, you know, part of the acquisition of My Cart Express. They were to issue shares to them.
Yeah, I'm just wondering what this could look like 3 years from now if they keep, like they have like the whole Norbrook backing.
Not Norbrook, the company, by the way. Norbrook Equity Partners. They're not the community, not the community.
Yeah. Oh, yeah. I don't know. I'm wondering what they might look like. That could be another one that's like a longer one though.
I'm looking at MailPac now. Your top 10 owns 89.63%. You're right. And I'm not seeing that. Yeah, the shares haven't been issued for real.
I even saw them hinting at more acquisitions. I think it makes sense for
definitely
their size of their company and stuff.
Yeah, I could see them going for more players.
Yeah.
I wouldn't be surprised if they reached out to my shipping company, ASAP Express. Yeah.
You think they're for sale?
Probably. I mean, I feel like anyone's for sale with the right price. You just have to come with the right price. I've seen ASAP Express. Sorry that I'm talking about them on the podcast. They don't sponsor me or anything like that. But like during Christmas time, they were packed, man. Like it took me there were lines upon lines every single day, and long lines. In fact, they had to put up tents outside for people to, wait to get their packages and so on. And it's not like they don't have like the tech, because they have like tablets you sign in and so on. You don't have to really speak to anyone until you get your package and so on. And I'm just like, a lot of people use this. They don't offer delivery yet. They said they would start. That's the only thing that would be game changing for me. Because if I don't have to wait, if I can just send the money online and you deliver it to my yard, perfect. The only reason I haven't, who does that for you? Circles?
Yeah.
Circles does that? Okay. The only reason I haven't switched, I don't know. I guess they're cheap. They're cheaper. So I feel like MailPac is expensive when I first looked at them, and I just never really looked back. But I know I think they offer those services as well in terms of delivery. You're not worried about dilution with MailPac then? Like in terms of them issuing more shares to help acquire companies?
It's possible, but I feel like from what I see, like what the Norbrook equity guys do, I don't think they would do foolishness, but I guess it's something to watch. Yeah. I think that if they issue shares, it'll be getting equal value.
Okay.
Or it'll make sense. Yeah, but I guess we will see.
Yeah,
we will see. And I don't
we haven't seen much from them on the JSE specifically. Like they do a lot of stuff privately, but I haven't seen like a lot of their moves publicly. But we'll see. You're right.
You brought up one. I was just thinking the JSE, the stock itself. That could be actually a nice one for.
The JSE is always a stock I would DCA to. Yeah. Why for you though?
I mean, I feel like by some of the stuff that they're planning what micro markets. Say it happens this year. They're building out the government securities. I'm really interested in that and how that will go, because when I look at it, the amount of money, it's like those size of the the debt instruments or whatever. It's like it's like billions and billions and billions of dollars and stuff. I'm even also interested in, does it necessarily have to just be the Jamaican government? So they maybe start with the Jamaican government. It's like, the Jamaican government wants to borrow some money, they'll borrow the money from someone, and then you can trade the instrument on the stock exchange itself, like trade it like a stock, but it's like a bond or some sort of debt instrument or a loan or whatever. I'm even wondering, like, hey, what if they even do it for countries like other than Jamaica, like in the region? So okay, Jamaica starts to do it well, and then they're like, hey, Barbados says you want to do this, Bahamas says you want to do this. I'm even interested in seeing like some of the big listings that may happen. I saw an article came out recently about what's it called, Soapberry. I don't know if that's. Try to find the article, but I was like, that would be
$100 million upgrade.
What's the Where's the article?
Oh, I
Is
just see
Gleaner
it.
or Observer?
Gleaner. Soapberry is a wastewater treatment plant. I remember I briefly mentioned them on the episode with Ryan a couple weeks back. And look at this now.
You didn't know, you know?
But it's long time Soapberry supposed to list, bro. I remember I think it was on when Nigel Clark was still finance minister, closer to the end of his tenure, and I think is Chris Berry asked him about that too.
You asked him about Soapberry?
Yeah, I'm pretty sure the convo was about Soapberry. I need to find that convo.
Oh, I could actually probably check it now.
Yeah, just the government divesting other assets, just like they did with TRANSJAM. If they do that with Soapberry, that would be cool.
Yeah. It says government expects to divest the Soapberry wastewater treatment plant this year as part of plans to double its capacity to meet infrastructure needs for increased housing developments. We will go to market this year to divest the Soapberry treatment plant. Matthew Samuda said, yeah. Then it says wants a private entity to invest. There's a private entity.
Yeah. I mean,
it's say 100 million to 150 million US. But I guess that's the thing. It doesn't necessarily mean they're gonna list the shares on our exchange.
Yeah, just so they'd go to market.
Yeah.
So they can get the money anyway. You know, I think it's a good move because, I think the size of Kingston and Portmore, Kingston and St. Andrew and Portmore, it's just grown tremendously in the past couple of decades. And I don't think Soapberry has really, I don't know, I can't say how much it has expanded over that time. But if one of the limiting factors in expansion of like housing and things like that is this, then yeah, I think it's a good move. He was talking about to upgrade would move Soapberry from a secondary to a tertiary treatment facility, seen as critical to protect the Kingston Harbour. Kingston Harbour can only truly be blue with tertiary treatment at Soapberry treatment plant. So it has significant environmental benefits. And here it is. But it also truly unlocks between Spanish Town to Morant Bay genuine capacity for real estate development. And they're just talking about even other, long-term water challenges. These include completing the Rio Cobre water treatment plant in Content St. Catherine. Is that Epley doing that?
Okay.
I'm not sure if that's the project.
I don't remember the specific company.
I need to find that. But Rio Cobra Water Limited.
Oh wait, I found I think the other thing I just remembered why I was thinking the Soapberry would list was that there was an NCB briefing I think last week, and then Angus Young, who runs NCB Cap Markets, he said something about like, there being a major, I'm trying to remember the exact quote, like a major, I think it sounds like he said a major main market listing this year that they were working on. And then I said the Soapberry article, so I was like, But I found the Mayberry briefing that you're talking about was January 25, 2023. And I see they were asked about, Minister Clark was asked about Soapberry. And he was saying, Soapberry, I mean, I don't know, or this is, it's like saying, I don't know if an IPO is the right format for it, but certainly attracting private capital is on the books to be put in a process that can allow it to attract private capital in some form.
This was, you said, who's saying that?
Nigel, this is 2023. Still, you can search it up on YouTube, Mayberry Investor Forum.
Yes. That was
Dr. The Honorable Nigel Clark. This was January 2023.
I wonder how things have
Interesting.
changed.
I'm just wondering what else could be. Oh, go.
No, go ahead. You're saying?
I'm just wondering what if it's not soapberry, what else is it? He said I think he said major main market listing. They were doing West Indies Petroleum. They were the broker for that?
Who, NCB?
Yeah.
I know that a
I remember there was an
an
article. No, I was talking about there was like remember there was some article that was almost like hinting at the listing at one point of West Indies Petroleum or WIPE.
Yeah.
I think there was a broker that was mentioned in
It was
the
two.
article.
It wasn't two brokers? I don't know why. In my head, it was NCB and SYGNUS.
SYGNUS?
Or no,
or
NCB and
JMMB. Yeah. I'm trying to find the initial article though. Remember, it was something like 80 million US IPO or something like that.
Mm-hmm.
Found the article. Because maybe it's that.
Could be.
Maybe it is that.
I mean, WIPT was always supposed to precede this, so let's see. I think there's a reason they listed the terminal by listing by introduction. It's almost like they want to test the waters to see the appetite for the stock.
No, this says JMMB and Barita Investments have been retained as co-broker. I mean, that can change still.
True. Who did the terminal? Oh wait,
I think that was
by introduction.
VM.
Yeah, VM. Yeah. That's why I don't remember it.
Interesting. Yeah, I don't know. Yeah, I think the plan was like I was more just saying with JSE, I was saying some of the initiatives that they have, like all the micro markets, some of the like the government securities, I'm seeing more brokers push like the whole bonds and stuff like that. Yeah, I think, and especially even what's happened with I'm wondering if they can try to capitalize on what happened with, I guess, Melissa, because if you look at it, like a lot of money is going to be flowing into Jamaica. I think it'd be smart for them to try to say, hey, let's try to get some part of this financing, you know, whether it's debts like loans or equity or whatnot.
I think that was a lot of the conference stuff that we went to. You could see a lot of those links being tied, and you talking about even other exchanges, because we had the leaders of like Rwanda's exchange, Bahamas.
They still need to really. They've been talking about the whole cross listing stuff for a long time. That would be very interesting.
That could bring a lot of money, because look at the companies that have listed via cross listing. They're massive companies. AS Bryden isn't small. Massey is a massive company. I think they're massive for a reason. So, those things can bring significant food to the JSE. But you're right. Some of the things I'm looking at for the JSE are those links with the government. It doesn't have to even just be strictly like transaction fees or so on. It could even be used for their trustee services as well. So there are like a ton of different ways you can skin the cat with them. So yeah, I'm hoping to see more listings though. That's something I'm excited about. But yeah, I think we gave quite a few stocks with DCA.
One more that I'm just looking at now. How didn't we say SEPROD?
SEPROD,
yeah,
truly.
SEPROD could be an interesting one.
SEPROD, I do like SEPROD as a company.
Go Team Musson. Go Team Musson.
People bullish on Musson now.
Yeah.
$80, high nominal price, as you're saying.
Yeah. Yeah, that is one of the, I guess that's somewhat concerned, but I think if it's something big enough, it can break the 100. Can definitely break the 100. Has it ever gone to 100 before?
I don't know.
I feel like it has, right?
I have no idea. What do you think about the most recent results? I don't know if you've looked through them.
I did. I was quite shocked because I think it was like some cost reduction or something, but I didn't really understand why. How they were able to. I don't know if it's part of the stuff with the whole them like with their SEPROD and CPJ, all that stuff. Maybe bring in some of those instead of having to 3 different companies have the expenses, like you just pull it all into one.
Some synergies.
Yeah, but when I looked at it, I want to see the audited for it.
Yeah,
that is something because it was the other operating expenses had dropped like a lot, and I was like, well, what's happened there? Because I think revenues were basically flat for the quarter, but then profits were up.
Cost cutting.
1,100%.
Yeah, massive.
I was like, okay, wow. I mean, yes, granted, I think 2024, that last quarter was bad for them. So I guess if you look back at maybe the other years, it doesn't look as impressive, but it's still, I think, is quite.
Yeah, it's a lot of profits that they made that quarter though. 2.4 bill.
Yeah, definitely want to see the audited for that.
Yeah, actually.
Yeah, because for that quarter it was 2.6 billion in profits, and then for the same quarter in 2020. Hold on. Oh, they had to restate something. Oh, that's weird. I think they restated one of their, because I don't know, I should probably pull it up. Just realized one of the. Okay, so 3 months ended December 2025. The profit was 2.7 billion. And it says here the profit was 351 million for quarter 4 2024. But then when you go to the original 2024 report, it actually was 1.2. Well, not actually, as in initially the report came out saying it was 1.2. So I guess the audited adjusted it. Right? Because it's saying 2024.
The audit,
2024. Yeah. Interesting.
Yeah.
But
When is the audited supposed to come out? This just came out. When? February 13th?
90.
It's 90 days, so
90 days after end of December.
End of March.
End of March, latest. Not far from now. In March now, so.
Yeah. Guess we will see.
Yeah, but I'm interested in what they're doing. Like, I feel like these guys are serious about business.
Yeah.
I remember like the whole. I think SEPROD got. They got approval maybe a year or 2 ago to issue shares. I haven't seen these guys do an equity raise yet. Well, even when they know, actually, I think they kind of have. Wasn't there one that did? How they do their stuff? I think they know what they're doing. That's what I would say. And I think like with the whole, they've been expanding with their manufacturing, their distribution. I think just you're seeing the early signs of this.
Yeah.
And I think they probably are gearing up for something big, like a big acquisition or something, to really grow the business.
I don't know. Musson always in acquisition mode. Even like the stuff with GNAC and Beacon and like even that I think can make a lot of money. But talking about SEPROD, yeah, like I'm curious to see how the next couple quarters perform too, because is this like a one-off cost-cutting thing? Is this gonna just
the audited? I definitely want to see that audited.
Yeah,
because I looked at the last year's audited and I was trying to break it down to see what could possibly do that, but yeah.
A lot to look through. If you guys have any stocks you would DCA for the next 3 years, let us know in the comments down below. Like, I'm curious to see. Did we miss any? We probably missed a few, a few really good stocks. But we read all the comments, so let us know in the comments down below. If you like this episode, please drop a subscribe button, ring that notification bell. We drop episodes like this every single Friday. All right. Thank you guys so much for being on the show. And as always, stay limitless.
Peace.